Welcome back to Logistics News on the Compare the Carrier channel. I am Matthew, your host for today. Get your dose of transportation industry updates as we break down the latest headlines impacting shipping and freight. In our last episode, we dove into the ups and downs of the freight market. Today, we're shifting focus to the big picture, growth trends that are reshaping the logistics landscape. Let's dive in.
U.S.-Mexico trade continues record-setting growth.
Hold on to your hard hats, folks, because U.S.-Expo trade is on a tear. According to a recent report by FreightWaves, the total value of trade between these two countries reached a whopping $800 billion in 2023. That's a record high, and it shows no signs of slowing down. This surge in trade isn't just a number on a page. Major players in the logistics industry are taking notice. Take Maersk. For example, they just opened a brand new warehouse facility in Tijuana, Mexico. This expansion is a clear sign that Maersk expects the U.S.-Mexico trade boom to continue. And listen up, brokers. This is a golden opportunity for those of you who specialize in cross-border transportation with more goods moving back and forth between the U.S. and Mexico. There's a growing demand for your expertise. Yeah, so dust off your NAFTA knowledge and get ready to connect shippers with the transport solutions. The trend doesn't stop there. Echo Global Logistics, another major player, is also expanding its footprint in Mexico. This all points towards one thing. The U.S.-Mexico trade corridor is hotter than ever. So what does this mean for you? Buckle up for a busy ride because the demand for skilled cross-border brokers is only going to increase. Many experts in the field agree that now there will be some kind of boom in investment in the Mexican economy, which did not happen in the 90s and zeros due to the active flow of investments into China. This redirection of investment could be positive for both the US and Mexico in the long term. For Mexico, this is obviously new jobs and an improvement in their economy and the well-being of their citizens. For the United States, this is a shorter delivery distance from manufactured goods and protection from the active development of China. And what is even more important is the high probability of a decrease in the flow of refugees in the long term, since the more people work in Mexico receiving decent wages, the fewer will immigrate illegally to the States. Hey folks, what do you think about US-Mexico trade? Do you think it will really change the situation with immigration, or should the business invest in the US only? Share your thoughts in the comments. And we are going to the next topic.
February container imports show robust recovery.
U.S. ports are about to get a whole lot busier. According to a recent report in Inbound Logistics, February container imports showed a strong recovery. This is a major turnaround after the recent slowdown we saw, signaling that U.S. businesses might be restocking and preparing for increased consumer demand. What does this mean for carriers and brokers? Well, more containers coming in means more cargo to move. Carriers and broker companies can get ready for a potential surge in transportation requests as those imported goods need to find their way inland. Especially if you specialize in port-to-warehouse transport or long-haul trucking, this is a promising sign for your business. What does it mean for people and companies willing to move some goods? Potential raise of the transportation cost due to the raised demand over the supply. Though the raise might not be significant, business counts each penny and nobody is willing to pay extra. Are higher transportation costs a concern for your business with increasing imports? How do you plan to manage that? So keep your eyes peeled on those port activity reports with Compare the Carrier and get ready to put those transportation plans into action.
Logistics tech market to exceed $120 billion by 2030.
Get ready to upgrade your operations because the future of logistics is all about connectivity. According to a new report on Yahoo Finance, the global market for connected logistics is booming and could reach a staggering $123.5 billion by 2032. Even though there are a lot of cases when such reports turn vice versa in a blink of an eye, the tendency tells us that this niche is really booming and gathering millions of investments. But what does connected logistics really mean? Think of it like a supercharged network where your trucks, warehouses, and even the cargo itself are constantly talking to each other. We're talking about ICO, Internet of Things, sensors tracking shipments in real time, optimizing delivery routes, and even blockchain technology making supply chains more transparent. For yours and brokers, this signals a major shift. Staying ahead of the curve means embracing technology, whether it's adopting new software, partnering with tech-savvy carriers like Compare the Carrier, or even finding ways to integrate data analytics into your services. This is a new race for process optimization and expense reduction, and the winner in it can get a big piece of the pie of American logistics services. For business, this means that great changes are coming, even better load status tracking, more accurate delivery estimates, and the best of all, potentially lower shipment costs. So are you ready to make your step into the digital age?
$1 shift, electrifying America's trucks.
Gas up now. So maybe the future of trucking is going electric? Of course, this transition won't happen overnight, but several recent studies highlight the massive investments that will be required. Analysts predict it could take upwards of $1 trillion to fully electrify the US commercial truck fleet. Now, hold on, before you get sticker shock, remember this transformation isn't an immediate threat to traditional diesel carriers. It's a long-term trend that you'll need to keep a close eye on. In fact, the Biden administration is rolling out ambitious plans to upgrade the nation's power grid in support of electric trucking, further emphasizing the move towards cleaner transportation. Anyway, right now, there are no electric trucks in series production that can compete with diesel both in delivery range and horsepowers. Electric batteries cost astronomical high, making it really possible in the near future to switch only cargo vans to electric and not the big trucks delivering goods cross-country. For all you brokers out there, this shift opens up interesting possibilities. We might start seeing new specialized hauling niches for electric vehicle transport or brokers who focus on finding charging stations for long-haul electric routes. It's a good time to start thinking outside the box and explore how your business can adapt to this evolving landscape. Do you really think electric trucks could help to solve driver shortages? Let us know what you think in the comment.
Panama Canal changes could impact U.S. port traffic.
If you're in the business of moving goods to and from the U.S., listen up. Changes at the Panama Canal could have a ripple effect on shipping routes and port traffic. The Canal Authority is adjusting operations, which could lead to more booking slots for ships transiting this key waterway between the Atlantic and Pacific. Now, this doesn't mean every ship will get through faster, but it could potentially ease congestion and create more predictable shipping times. For transportation companies, this means keeping a close eye on which U.S. ports might see increased traffic as a result. It's all about staying flexible and helping your clients adjust their shipping strategies. Keep track of the Panama Canal updates. They could unlock new opportunities, especially for those with East Coast clients.
Truck tonnage index.
Let's wrap up this news update with a look at the big picture. While the trucking industry is still facing a recession, there are some encouraging signs of life. The latest American Trucking Association added truck tonnage index showed the 4.3 increase in tonnage in February. Of course, we're not out of the woods yet, but for you brokers, now is the time to double down on finding those leads and offering top-notch service. A recovering market and see more potential clients on the lookout for reliable transportation solutions. And that's your logistics news update. Thanks for tuning into logistics news on the Compare the Carrier channel. If you're looking to stay on top of the latest industry trends and insights, be sure to hit that subscribe button and never miss an episode. And remember, when you're ready to expand your reach and fill those empty miles, Compare the Carrier helps you connect with the right opportunities. We streamline shipping by connecting businesses with the right transportation providers and help carriers and brokers find their clients. Feel free to visit our website or contact us at info@comparethecarry.com to find out all the opportunities we can offer you. And don't forget to say that you from Matthew on YouTube to get the best discount possible. Thank you for watching. Until next time, stay ahead of the curve. Compare the Carrier, compare to save.